Hi, this is David Lucas, and this is the accompanying video on the broadcast that we did on Saturday, October the 23rd. My apologies for the delay. I had promised I'd said on that actual broadcast that it would be posted right after it aired locally on our affiliate station, KRN 102.9 News Radio. Feeling a little under the weather, so I'm just now getting around to it. You may be able to tell that my voice is not quite up to par. My apologies. Alright, so what we talked about on that broadcast is 0% financing that the car manufacturers provide too good to be true. Oftentimes when we hear things like this, it seems that they are too good to be true, or we don't understand, or we don't investigate it. You shouldn't always just assume something like this is too good to be true. Certainly there are many things throughout history where people discounted it and said, well, certainly that's too good to be true, so they don't investigate it anymore, and they don't take advantage of it. Many, many things throughout history. I'm sure when Edison had invented the light bulb, people had said it was too good to be true, or not necessarily just the light bulb, but before he invented it, people scoffed at that and said it was too good to be true. Many things throughout history. The radio is a perfect example. There's no way voices can fly through the atmosphere. That's just insane. That's sci-fi. That'll never happen. Whatever. You get the big idea. People would discount it. But obviously there are things that at first they seem too good to be true, but they are absolutely true, and it's something that you can take advantage of. But oftentimes when we hear things like this, we only hear half-truths. We're only told part of the story. So the purpose of this video is to explore, again, 0% financing the car manufacturers are famous for offering. And I'm going to break down the math behind it and show you how it actually works. So again, as always, we're going to take a basic financial calculator, and I'm going to start out with a payment calculator, which will solve for an unknown. So let's say this is how it typically works. They offer a published rate, or published MSRP, or whatever it may be, and then on top of that they offer a published rebate. Sometimes it's published, sometimes it's not. So in other words, but in this example, I'm going to give you a published rebate. So this is how it would work in this instance. The car manufacturer says, we're going to sell you the car, the automobile, at $35,000, or if you go and get your own financing or pay cash, we're going to give you a rebate of $4,000. So, and one other point I want to make, and what really prompted me to want to investigate this further, is GMAC at one time, which was the division of, since then they've rebranded it into GM Finance, but General Motors, of course, the car manufacturer, and then they had the finance division that they owned. And at the time, the finance division was immensely more profitable than GM. Multiple other instances, as I was doing research on this, where the finance division was actually more profitable. They made more money than actually selling the cars. Well, that begs the question. How can they make an enormous amount of money when they're famous for offering all these 0% financing deals? So here's how the math works. With the published rebate, and again, in this example, they're going to sell you the car for $35,000, right? And if you take advantage of their 0%. So I'm going to put end of the paid at the end of the period, and this, of course, is a monthly payment. So, of course, they're going to give us 0%. And an example I gave on the radio broadcast, we'll stick with that, 48 months, which gives us a payment of $729.17. So I'm going to copy that, and then we're going to pull up another financial calculator here, and we're going to do an interest rate calculator. So what we're going to do here is we're going to validate this 0%. Again, the $35,000, which is what they're willing if we take it, take advantage of the 0% financing that the auto finance company is providing. And we know now that the payment is, because let me actually paste that in there. So we'll have the exact same numbers, $729.17 over, and again I need to change that to months, over 48 months, and we solve for the unknown, and we see that we have 0%. So in other words, I've just validated the math. When I started out, the 0% financing is offered at $35,000. 0% over 48 months gives us a payment of $729. That's the unknown we solve for. Then I go from the payment calculator to a rate calculator, and we take the $35,000 loan. Now that we've solved for the $729, plug that in over 48 months, and the unknown is what interest rate would that equal? Well, it's 0%. Now lastly, I'm going to take one more calculator here, rate calculator, and let's figure out how. Now this is where you really want to follow me, because the math, this is where, and you will see, in my opinion, that this is where the gimmick takes place. So if you don't take their financing, but you go pay cash or you go get financing from an outside financial institution, they're going to essentially sell you the car after the rebate for $31,000. It's $35,000, but they're going to give you a $4,000 rebate, hence $4,000 off the $35,000 equals the loan amount of $31,000. Now, and we know again the monthly payment is I'll paste that in there from the other calculators, $729.17 over 48 months. So therefore, I've just validated what they're actually charging you is 6.08%. Now, how can the GM Finance, Honda Finance, a lot of these auto or car manufacturer owned finance companies, how do they get away with calling 6.08% 0%? For the same payment, why did the principal balance change? So for instance, does GM say we're willing to lose money if you go somewhere else to finance your car, or if you pay cash? Think about this. This doesn't logically make sense. Why would they give you a discount if you go somewhere else to finance the car? So follow me. This is what happens. The manufacturing division says, okay, we can make a profit selling this car for $31,000. The finance department gets a hold of it and says, we're going to add $4,000 of interest to that, and we'll call it 0% if you pay it out. But if you don't borrow the money from us, then we're going to take off the interest that we shouldn't have charged you in the first place. But by adding it on there, they're able to call it 0% financing. Hopefully that makes sense to you. So people focus oftentimes on the 0%. I've heard instances where they literally take the 0% financing over a lower payment they could have gotten through a competing financial institution. It's amazing. It's a gimmick, but people don't think this process through. So where did this all begin? Someone was telling me about this. This really, they believe it began in the car finance. Not the car finance, excuse me, the furniture financing. And they gave me an example of a gentleman. He would advertise all over town, we tote the note, 0% financing on any furniture. And so, of course, people took advantage of this, wow, 0%. And then the story was told to me, and the way I understand it was that then one of his friends, the guy that owned his furniture store, said, let me ask you something. Do you charge a different price for the furniture than you do for the 0% furniture than you do that people get financing elsewhere or pay cash? He says, well, of course I do. I got to make money. And of course, just to drive home the point, same thing. They call it 0%, but he charged more for the same piece of furniture for someone that wanted his quote-unquote 0%. So again, I hope this sheds the light on something that is very, the 0%, which is notorious out there with the auto-owned finance divisions of many of the major car manufacturers. And as I've broken down the math, we can see that often these published and unpublished rebates, through simple mathematics, we can solve for the unknown and determine that in this instance, you're really being charged 6%. the one last thing I would like to cover is there is, and I talk about this extensively in my book, the most efficient way so you don't lose out on what is called lost opportunity cost. What is lost opportunity cost? If you give up $1 today, it not only costs you that dollar, but what that dollar could have earned you over the next 5, 10, 15, 20, or 30 years. So I talk about the different ways to purchase an automobile in my book, Whose Future Are You Financing? And by far the most efficient way, so you retain all the interest and the principal and you get the car, is by creating your own personal monetary system, or what some people call privatized financing. You can pick up my book by going to dlshowonline.com, click on the banner right there on the homepage, Whose Future Are You Financing, to get your copy today. This is David Lucas, and thank you for watching this video regarding the 0% financing that auto finance companies offer quite frequently.